You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, welcome back to TWIFO, This Week in Futures Options, the program where, as the name implies, you break down the hot products, maybe some of the surprise products out there, maybe some of the weird trades that caught our eye out here in the world of futures options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever busy this time of week Options Insider Radio Network. A lot of content coming to you every Friday, and TWIFO brings it all to a T, wraps it all up, talking all things futures options. You're into vol, you're into crude, you're into gold, you're into all sorts of other esoteric products. We got you covered here on TWIFO. And of course, if you listen to this, you'll love the network. If you haven't subscribed already, head on over, subscribe to the Options Insider, the full network. We don't mind if you subscribe to this show, but the full network gives you everything, including this show. And the easiest place to find that, of course, the mothership, the flagship, theoptionsinsider.com, as well as via your platform of choice. If you're an iTunes guy, if you're an Android guy, maybe you're a Pocket Cast user, dog catcher, whatever the heck you like to use, we should be there. And just grab the show, grab the network, and you're good to go. And of course, you can always join us live every Friday, 1:30 p.m. Central via Mixlr, MIXLR. All sorts of fun stuff there. So for those of you who are hardcore, need to have it in your ears now, we got you covered there. And of course, however you listen, hit us up. I'd like to hear from you guys. Questions, comments, pearls of wisdom, insight, all that good stuff. You know how to reach out to us. All right, and joining me on the oil program today, my cohort, my partner in crime, the yin to my proverbial yang, Mr. Nick Howard, the Quick Strike, the founder of Quick Strike, and the creator also of Bantix Technologies. Mr. Nick, welcome back to the program, sir. It doesn't feel like I just talked to you. It doesn't seem like it's been a whole week.
It was a fast week for sure, right? So we're back on, and oil's still at 50, so not much has changed really, right? So it's deja vu all over again.
Yeah, it is funny. After all that hubbub last week of oil rally and oil's going to break, the bulls are back. It's time for oil to rally. Yeah, this week not so much. Well, since you mentioned it, let's just get into it. Let's start there. Everybody loves themselves some crude, so we'll get crude with crude. And it was an interesting week, as Nick mentioned, kind of hovering still around that 50 handle out there in good old crude land. As I switch over, by the way, forgot to mention top of the show, if you want to follow along with the reports that we do here, me and Mr. Nick, easiest place to do that, cmegroup.com/TWIFO, TWIFO. That will get you pretty much up to speed with all the data Nick and I are looking at right now. Like the report I'm looking at right now for WTI over there on the old CME complex. And it was an interesting week, even though the futures kind of settling in around the 50 handle. A lot of interesting stuff going on. We're seeing a lot of talk overseas. You know, this, and of course, this will they, won't they dance with OPEC for a while. Will they cut, won't they cut? Will the member nations and other outside entities, will they follow suit? Will they do their own thing? That's always the dance with OPEC. And that dance continued this week. We see OPEC leading cuts of about 1.8 million barrels, 1.8 million, I should say, barrels per day. But the exports still rose to a record high, helping to keep us around that 50 handle. We're seeing output out of some non-OPEC nations like Nigeria and Libya, both at 2017 highs. Russian output also high, even though they're part of that agreement. They grew by 11.1% in the second quarter year on year. So all this talk of cuts, yet still production in a lot of nations at 2017 highs. And of course, last week we saw some of the trimming of U.S. supplies that helped to firm up some of the crude out there. But still, it's been interesting, and this tug of war continues. That means it's good for us, Nick, here on the show, because it makes things a little interesting. You'd think, though, with this kind of tug of war around the 50 handle, we'd get maybe a little bit more juice on the vol tip. But, you know, when we kind of hover on these levels, we actually saw vol coming in, and coming in quite a bit, actually, on some of the nearer-term strikes and months here, with vol taking a break after a nice run-up into the crude last week. Now, of course, vol relaxing a little bit this week, kind of playing the wait-and-see game. The wait-and-see game, never really a big driver for vol out there. I'll let you get into the quickskew stuff in a little bit, because that's always fascinating to dig in what's moving, puts, and calls independently out there in WTI options. If you're thinking, what was the number one month and strike with a bullet? Well, it was an interesting week out there. About half of the volume coming in that SEP contract, which is out there about just about exactly half, which is pretty much where we see the lion's share of the action. That's about the number we see usually every week, right around half for that front contract. With the 50 calls, not surprisingly, taking the lead. Pretty much it was 50 calls for a lot of the months. We'll get to that in a second. 50 calls leading the week this week with about 28,000 and change. The lion's share coming on Tuesday, about a third of that, 10,000 and change coming on Tuesday, coming on Tuesday there. And net on the week, actually a little bit of closing. So a lot of back and forth on that 50 strike, maybe some bulls piling in earlier in the week, hoping for a sustained rally when it didn't materialize. Coming back later in the week and closing that out. Following hot on his heels, though, we kind of talked about that tight strangle / risk reversal, call it what you will, at 50.45. That was active again this week. The 45 puts doing almost 28,000 contracts. The lion's share also coming on Tuesday, about 8,700 on that day. So, and then about 7,400 on Wednesday. So a couple of active days there. Also net closing on the week, about 6,000 contracts. So then again, maybe some of the bears also maybe hoping for an aggressive retracement. Didn't happen. Close them out later in the week. So a lot of back and forth on those two strikes. Those are still fairly active strikes, which is probably not surprising to anybody really out there. Also saw some action out in October. I want to bring those up as well because the OC 47 puts were fairly active as well, doing about 20,000 contracts this week. So even though about half of the paper was in the front month, we saw a decent smattering this week, which was kind of nice. Again, about 13,000, so over half, about 2/3 of the paper going up on Tuesday. A very active day, and this contract really lightened it up. The 47 puts, pretty much all opening, all this paper this week, the lion's share of it. So a lot of opening positioning out there on the 47 strike out there in October, which is kind of interesting and perhaps a little bit surprising. 48 puts also active, about 11,000 and change over there. Again, the lion's share coming on Tuesday, so maybe a bit of a tight vertical there going up on Tuesday. A little bit farther out, getting all the way out to Dees at the end of the year. We also saw activity in the 45 puts out there. Dees 2017 45 puts, almost 19,000. So it was nice. It seemed like 20,000 was kind of the magic number this week whenever you looked. Right around that level was a lot of action out there. And about 19,000 coming up with these 45 puts, including pretty even paper on Monday, Tuesday, and Thursday, about 5,500 each of those days. Wednesday and today, a little bit slighter. Again, total about nearly 19,000, and actually pretty much unched from an open interest perspective. So back and forth slinging out there on those Dees 47 puts, kind of split in the middle of that strangle, the 45-50 strangle out there. Looking a little bit farther out, also seeing some action. Well, actually farther out, farther closer to home, but farther up, we did see the Nove 55 calls, also pretty active out there this week. 3,700 of those bad boys lighting it up. And again, going farther out, all the way out to Dees of 2018, so over a year, about almost a year and a half. 55 calls, also pretty active out there, about 3,300 lighting it up out there. And not to be outdone, Nick, in fact, this one may be one of the more interesting. Looks like we had a vertical. It looks like it's the 45-35 vertical all the way out in Dees 2019. What caught my eye was that the opening on the 35 puts. I said, wait a minute, what's going on there? But 300 of those going up earlier this week as well. So not to be outdone with it's all crazy bulls all the time. Some bears out there as well. Not quite as I thought it was opening on 300 puts, 35 puts, which it was, but I think it really looks like this was a vertical. Otherwise, someone did very similar paper on both days. But Mr. Nick, it was an interesting week out there in Crude. I know you watch Crude quite a bit these days, as do I. It's kind of part of the game for TWIFO. What caught your eye out there from a volume perspective, from a hot strikes perspective, as well as from the quickskew perspective, sir?
Yeah, I think you mentioned, first off, that the September we had the highest percentage of volume, as we usually expect in that front month contract, right? So we started out with about 18 days to expiration. We're now around 13. So we would expect to see that. But what I thought was interesting, there was no gain basically in the open interest. So we're seeing that was really where the trade was, right? So we ended last week with a little bit of an upswing. People were maybe anticipating a further follow through on that 50, going through the 50 mark like we talked about last Friday, and we just didn't see it. So it looked like there was a lot of trade going on, and you saw the 50 calls had a little bit of change in the open interest as well. So that's where what initially caught my eyes, just the change in the flat open interest in the closing of the 50s, and I believe I think we got some close on the 45 strike as well. So maybe some trade within the band that we've seen from a futures movement standpoint, right? We're in that 45-50 range. So that was one thing that caught my eye. And then, if you start, and you mentioned some of the big changes or the big strikes in the Ocnove and Dees, but what I noticed, if you are out there and you are listening and you're on the report as well, if you click on the most active 47 put out in the volume side, what you're going to see, you'll see the calls and the puts when that pops open for the volume for the week. But you're going to notice that you saw your biggest gain in open interest in the October contract. Now there's two dimensions to that, right? It's the fact that the SEP is starting to roll inside of that 2-week period, so people are going to start rolling positions out. But you also see some new positioning here where you saw a lot of upside open interest anywhere from, you saw the 50 close, but you saw trades in the 51, 52, 53, all the way up to the 70 strike opening in the October. So that's kind of telling, a 20% increase in open interest and then the big opening on the upside. But at the same time, you also saw opening on the downside, and not quite as diverse a range of strikes. You got openings all the way down, or open interest changes all the way down to like the 42 strike and a closing on the 40. So we saw some of our traditional strikes start to close in, right? Our 50s and our 40s and our 45s had a change in OI. And then as we move out the curve on the term structure, we're seeing an increase in open interest on the upside strikes. And we see that same kind of increase in open interest even in the November contract, right? You mentioned the 55 call, but we saw trade in the 60, not much change there, but we did see more open interest changes in that 50 strike range, and the same thing, more open interest changes in the 40 strikes range on the downside. So that was something that initially caught my eye as well. And then the other sort of interesting thing, and you mentioned it, I believe in the June 2018, the 60 calls had quite a bit of volume this week as well, with a change in open interest. So what I can conject from there is, people, it may be to the point where some of the trade has moved out, right? So we're in the 42-day range now for the October contract. September, maybe that's going to be people closing positions, or maybe trying to scalp their gamma, or maybe trading in out there, given that there's, once the weekend rolls around, that's going to turn into a 10-day option. I didn't really look too much at the weeklies to see what they had to offer from, I'll pop those on right now, see what those had to offer from a volume standpoint. But, we're starting to see people move out on the term a little bit, saying, okay, I don't necessarily think much is going to take place, but I'm going to move out to the October, November, and even to December.
Not a hot week for the weeklies out there. I'm looking at them right now.
It doesn't look like it.
Once again,
the 7-day one, you see that there was an increase in OI, but not a crazy amount of trade at all. And then, so that's really what I thought was interesting from a volume and change in open interest standpoint. As far as the quick skew goes, if you're taking a look at the report, or even if you're looking after the fact while you're watching or while you're listening next week, if you click on that for those listeners coming in after the live show, if you click on that last week tab, you'll be able to see what we're looking at right now. And what you'll notice, at least what I noticed right away, you see a change in volatility right at the money's in, as Mark mentioned. Not much change in the relative regular 25 delta risk reversal, but you're seeing that the quick skew really it's pretty much unch on the week, and more or less all the way out for at least almost 6 to 7 months, all the way out. Well, there's a little bit of a change on the December contract, but really not that much. So we talked last week about how if we didn't really follow through on the 50 strike, we would see vol come in quite a bit, and I think that's what happened. I think there was a little bit. I looked intraday on Tuesday, I believe. It was Monday or Tuesday, where we got a little bump up to like 50, almost 50 in the future, but it came back down, and then I saw the term structure move up on that move, and then I saw it shift back down. And then when you see a shift, like we always talk about, back within a range, you see those gamma months get pounded pretty good, which we saw here, 2.25 vol, still pretty good amount of vol, even though it's under 14 days, but not much change in quick skew. So really not much change in sentiment. And we talked a little bit about it. When you go out to the 25 delta and you're put at this level, you're looking at, at a 20, we'll call it a 25 vol, even though that's not what it is, just easier to think about. But when you're looking at a 1% rich for the 1 and 1.5% rich for the put and the call, that's really not that much that you're talking about, right? You're talking about a quarter of a vol. So you're seeing the 25 delta, a quarter vol over the ATS, and then you're seeing not much more than a half a vol separation between the rich puts and the cheap calls on the October. You're seeing a little bit more steepness in the November and December. So short term inside of 40 days, kind of like, hey, we're not really sure what's going to go on here. So we've got a pretty balanced vol curve, or a slightly tilted to the, tilted up to the puts and down for the calls. And then outside of that, we start to see more of a downside bias from November out. So that's kind of telling, right? We didn't see much change. I think short term we see sort of a sideways pattern, and in the long term I still think, even though there was some activity in the higher strikes, I still think people are a seller of a big upside and more apt to be option openings on the downside.
We'd be remiss if we didn't mention, we talk a lot about crude bulls here on the show. One of the bigger ones is this guy they refer to as God. That's quite a title to have in the trading world, let alone in the crude world. And Bloomberg had a big write-up on him earlier this week. I believe his name is Andy Hall. God, I like that title. It's a good handle to have on the floor. Mine went kind of the other way. You can guess what it was. His flagship Aston Beck Master Commodities Fund 2 lost about 30% through June, because he was kind of out there with a lot of other people out there saying he thought maybe a crude rally could finally come obviously a bit of a crude bull, as we talked about here on the show many times. Didn't really materialize. We had that nice spike back in November with the OPEC run. Of course, this flirt with 50 earlier this week, and a couple of moves north of that a little bit, but really not too much. He's been trading this market since the 70s, so this is not some slouch. He made a bunch of money back in the financial crisis. I said he made about $100 million for himself. Not what he made for Citi trading for them. So this is a pretty well-known guy out there. And so to have him kind of be on the wrong track for quite a while and end up having to close his fund as a result is kind of interesting, because we haven't seen, there's been some near-term call positioning in WTI, but quite frankly, we haven't seen a lot of that, size money coming in and really, really looking to establish long-term bullish positions. We talked about a few here and there, and maybe he's one of the ones buying these, these 2019 way upside calls. Maybe that's part of what he spent his money on. But still the lion's share of the bid has been to the puts for quite some time. So it's kind of interesting that apparently he couldn't toe the line anymore. Decided to cut it off at a 30% loss. Pretty interesting stuff there, Mr. Nick. And I guess maybe you should listen to the show a little more. He would have known what the flow was doing out there, how the skew was shaping up, and maybe he could have informed his trades thusly, sir.
Yeah, for sure, right? Well, he just has to look at quickskew and he'll know which way the market thinks things are going, and he wouldn't have been so long maybe because the calls were so offered. But I'm sure he's not crying too hard with his $100 million pillow that he has from way back when, right? So maybe it's a good time to get out.
What would that $100 million pillow look like? It'd be quite a pillow, I think.
It'd be nice. It would be a very soft. I think it would be tailored to how you're feeling on that particular day, right? So it's a pretty good accommodating pillow, I would imagine.
I think it would be plucked from the feathers of some extinct animal, like the dodo bird. And so each feather is $1 million. You get 100 feathers in the pillow. You get $100 million pillow. There you go. I don't know. Interesting stuff. So there just goes to show even God can be wrong when it comes to crude. Crude is a fickle mistress, after all. Speaking of fickle, the markets are fickle. And we like to look every week, what was winning, what was losing. There's a lot of ways you can break this down. You can do it yourself over there at quickstrikecmegroup.com/TWIFO, the easiest place to get in there. And then you can see for yourself, break it down. The easiest way to do it is, of course, biggest winners and losers for the week, just from an underlying perspective. It was a bad week. Well, before we even get to that, Mr. Nick, I know you got more things cooking on crude. I'm all excited to get into winners and losers. But before we do, I'll tease people for a second. We got more stuff on crude, sir. Hit us up.
Yeah, that's my fault. I wanted to mention one more thing that I was watching. CME pretty soon will have a new block trade tool out there. We'll be able to really take a look at what's going on in the energy market, in the different asset classes, the energy market, what we're talking about right now, and even down to the individual products really, really easily. But one thing I noticed as I was out there testing the new tool and taking a look at it, so there was a lot of big trades on the block on Monday with sellers of, well, it looks like it. You obviously can't tell in the block because there's a buyer and a seller on here, but there were blocks that went up that were selling the 50 call, buying the 40 put, and buying the 60 call. So we're seeing a little bit of and it was selling, it was like one and a half of the 50 calls to 160 call and 140 put, and they were doing it hedged. So it was like people were rolling for, they were financing some upside and a strangle purchase with an at the money covered sale. So I thought that was sort of an interesting one, and we did see, and that was in September 8th. So that was out there a little bit in terms of the term structure, but that trade happened quite a bit of times on the block. So I just wanted to make sure I mentioned that. And the blocks are a place, if you really want to get a good handle on volatility, if you're in the trading apps and you're in CME Direct and the other ones, and they have some of the Globex flow coming through, but you can get another handle on volatility pretty easily by looking at the block trades, because a lot of times the block trades come through. They'll either come through as what's as outright options covered against futures, as generic spreads covered against futures, or as specific spreads covered. So when a spread is covered against a future, it's a very easy calculation to imply the volatility from that. So that's a good way to see whether things are being offered or bid from where they started in the morning. So I just want to make sure I got that out there.
I like that block trade tool. We don't get into it enough, but it's got a lot of so many great tools we can talk about here and dive into things. It's only an hour for the show, so we got to squeeze in what we can. But keep that block trade tool open. Mr. Nick, because I'm going to toss it to you again for a second in that when we get to our winners and losers of the week, because one of these, and this also kind of covers our surprise product. It's kind of one of the reasons I like to do this, because it kind of brings some things on our radar we probably wouldn't talk about usually. We talked about what was winning and losing this week. We made it simple, and we could break it down by changing OI, changing vol. That gets even more esoteric. We made it straightforward this week. Let's look at which underlying had the biggest week and the worst week. And the loser out there, you probably know, is Nat Gas, off nearly 6%, about 5.8%. The winner is going to be also a surprise product for the week, too, which is iron ore. I don't think we've ever actually talked iron ore on the show before, Mr. Nick. And one of the reasons is when you dig into the iron ore over there on QuickStrike, you can see why. Not a lot of options really lighting it up. I think about 150. I think a strip of a 50-lot strip went up in three different months out there this week. And that was pretty much it, which is kind of surprising given the fact that the iron ore was up nearly 13% this week, 12.66%. But I got a feeling, Mr. Nick, just a hinkling. The hairs in the back of my neck are standing up. It's telling me I think something probably went up over there in the block trades as well. You seen any interesting blocks out there in iron ore, sir? Our surprise product for the week.
Well, and when you started to mention that we were going to potentially talk about that, I did go out there and take a look. And again, you don't see a huge amount of volume in this contract, but you do see volume pretty regularly on the block for this contract. So again, it's someplace you can, once that tool is out there, you'll be able to go out there and take a look and follow along pretty easily. And the way, and it was just a steady increase throughout the week. So we started out around 65, 66, and we moved up, throughout the week to be almost 12% higher in the future itself. But the thing to keep in mind, or the thing you might not know about the blocks, is that a lot of times in these contracts they'll trade strips of futures. So you'll see quarterly strips. So and there's a lot of outrights that traded in here as well, but typically you'll see quarterly strips. So you see a Ocnov Dece or a Jan, Feb, March, stuff like that. So you'll see those strip trades, and they trade on what's called an average price. Right, so they sum up the different legs of it, and then they divide that by 3, and that becomes an average price. And how you determine how the pieces of that term structure move is how we generally do it. Is we take where those 3 pieces started in the morning, and then we distribute it evenly accordingly to how many legs there are, and then that's how we move the term structure up. So we weight. It's a price weighted adjustment of the term structure. So we saw a lot of strips trade on the Monday, and then we saw less so on as the week progressed. But I think that it was a pretty steady progression on our way up throughout the week. So that contract is the TIO contract, right? That's the iron ore TSI futures. And then the options contract that Mark mentioned, those are average price options. So that was a strip. So it was a fairly prescient trade that the guy or gal made on Monday, because he or she did the 70 call strip, and we went nothing but straight up to the 70 strike as the week went on. So not a great deal of volume. Probably, if I look at this and try to do a fast add up, we're probably looking at, 100 to 200 a day from a future standpoint. And really the only options I traded this week, like you mentioned, were those average price. We had bigger numbers on Monday in terms of futures, maybe 500. But then after that, a little bit, 100, 200 each of the days, the remainder of the week.
Thinking the remainder of the week, we got some people hitting us up with some questions. Before we get to that, Mr. Nick, any other products lighting it up for you? You really feel compelled, you want to break down here on the old TWIFO? Now is the time, sir. Have at it.
Well, I think we probably should take a look at the beans this week, because they were, we talk about them quite a bit, but they were. We had a run-up with the weather and all that kind of stuff. You saw corn, wheat, and beans have run-ups over the last couple of weeks, but this week the beans were off across the board pretty much about 55 cents. And with that, and basically that, and it might have been with all this rain that we had, with that, the volatility kind of got hammered pretty good. So you see a 4.5, a 3.5, a 9.25 in the November new crop option, 9.25 vol. So basically got cut in half for the new crop stuff. So you saw it really get hammered. And with that hammering, you saw at least in the front 20-day option, you saw the quick skew basically going from cheap puts and expensive calls to not so expensive calls and almost flat puts to the at the money. So you saw a big twist in that vol curve in the old crop, the September and the October options. For the new crop now, interestingly enough, you saw it go the other way. You saw calls get richer and puts get a little bit less cheap, but calls got richer. So I thought that was interesting given the big move we had down from a 5% move down in the price itself, 50 cents. We had, nothing less than 3/4. If we look only from new crop down November, October, and September, we had 9 1/4, 3 1/2, and 4 5/8 vol decreases, right? And then changes where skew got a lot more negative. The regular risk reversal call minus put got a lot more negative, and the skew itself, right? We talked about it right off the bat. Calls got less expensive, puts got less cheap. So you basically saw like somebody took the handlebars and kind of straightened them out, right? You fell off the bike, they got tilted to the left side down, and now you straighten them out and you could ride a little bit more steadily without kind of getting cockeyed and losing your balance while you're driving down soybean lane. But, that's really something I wanted to mention about beans, because we kind of hot and cold on them for a long. We were hot on them for a long time, then we were cold for a little while. But really, the corn, wheat, and beans that really have had a raucous ride over the last few weeks.
I've always wanted to ride down soybean lane. I've heard it was bumpy, and now we have a good mental image of what that would be like. Looking what was lighting up this week, it was still out there in the old front contract where we saw about a third, but it was all the way out there until November here, where we saw the lion's share of the action, 52%. And a lot of that coming on these 1,100 calls that were the big winner, the hot strike for the week out here in soybeans. 27,000 of those bad boys going up this week, but almost half, about 12,000, just shy of it, coming on Tuesday. And net on the week, about a third of that paper, actually about a quarter of that paper, is closing here on the week. So interesting, a lot of back and forth on those 1,100s. Nick mentioned that the soybeans getting a little bit clipped this week, shall we say, off about 5%, right around the 9.5, 960 level. So these are, shall we say, a little bit out of the money on these calls. About half, 52% of the volume, like I said, coming in this month, this expiration cycle. About the pars, the even number calls, also looking pretty good. About 15,000 of those going up this week, pretty evenly split throughout the week. And OI pretty much unched this week as well. So a lot of back and forth, as to be expected. Those kind of even number strikes really get a lot of action in times like this. And then following right behind it, we also saw the par calls going up out there in the SEP contract. Those were doing about 12,000 contracts of those this week as well. Also about 12,000 of the 960, puts out here in November, with the lion's share of those coming on Tuesday as well. Tuesday, the big day, 4,200 contracts out there. About a third of those actually opening this week, so a little net opening on that strike, which is kind of interesting. You go farther out, you don't really see a lot of action out there. Don't see them in the weeklies really either as a ton. So it's interesting to watch those nonetheless. The beans, kind of an interesting product. You haven't checked in on them in a while. We haven't got a little bit more ags into the rotation of late, though, because they have been moving, as you said, with some of the weather-related developments and other things out there. We talked corn a bit, Reese. I think when you were traveling. We've talked beans a little bit now, so who knows what's next. Maybe we'll get wheat into the rotation. All you ag heads can be happy out there. Got a little bit of corn, a little bit of beans on the old show this week. But we got to get you guys on the show, too. So without further ado, let's keep on rolling into our futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the Futures Options Feedback, the portion of the show where you guys take the reins and tell us what to talk about. Quite frankly, it's nice and refreshing for us. You guys always throw some interesting curveballs out there, which makes it kind of fun. Let's pay off what we talked about last week. We asked you guys during the show. We talked a lot about index vol last week. We said, hey, with VIX circling the drain, where are you guys looking for your next volatility fix? So we gave you a few choices. We said Nasdaq won the Nasdaq, aka the Qs. Good old Russell 2000. Talked a lot about that last week on the show. So your just general commodity space could be oil, gold, whatever you feel in that space, or the single name equities could be your Amazons, your Teslas, whatever floats your boat out there. And number one, pretty aggressively, was the Nasdaq 100, aka the Qs, with about nearly 40% of the vote. 16% come in for the Russell 2000, 20% for commodities, and 25% for the single names. So interesting. Nasdaq, Nick, I would not have picked that. I'll wait a little bit to get to our question of the week this week. It's kind of an interesting one. It kind of touches on a product a lot of you guys like to hit on. Oh, speaking of which, suggesting for that poll happens all the time when we ask you where you want your vol. Jane Nug Never Moves wrote Bitcoin. Maybe that's a hint, a tease for what our question of the week this week is going to be about. But before we get to that, Mr. Nick, let's get some other questions here. We got one here. Tanny9 says, what do you guys think of the lack of open interest in UUP? Is there another way to play the U.S. dollar that I'm missing? And he writes in, if you're not familiar with UUP listeners, this is the PowerShares Deutsche Bank U.S. Dollar Index Bullish Fund. Say that 5 times fast. And this is going to track the changes in this, effectively, this proprietary index they've cooked up, which is long the dollar against a portfolio of other currencies. I think they mentioned which other ones are here. A basket of 6 currencies, so the euro, the yen, the pound, the dollar, the Swedish krona, and the Swiss franc. So it's essentially tracking this in this proprietary index. He's, or perhaps she, Tanny9, frustrated by the lack of OI. It doesn't surprise me that there's not a lot. I checked it out when this question came in, and she's right, or he's right. There's not a lot of OI there. It doesn't surprise me. This is options on a proprietary kind of funky index that attempts to replicate what's going on already in the futures options market. I think you probably know where I'm going to head with this, my answer. Maybe Nick will have a similar answer. Maybe he'll go different. We'll see. Maybe we'll debate. But that's why we talk a lot about the big futures options contracts here, because they have a lot of the OI. So if you want to replicate this yourself, you can. You didn't say specifically which of these currencies really interest you. I'm assuming you want that whole basket. That's a little bit more of a challenge. Obviously, there's a lot of big currency pairs that trade a lot every day. We talked before on the show many times about pound dollar, about euro dollar, you can yen dollar. Pick your currency versus the dollar. You can replicate a lot of that yourself. So I'm assuming if there's a couple of these that interest you more, maybe you're more into the euro versus the dollar or the yen versus the dollar than you are maybe Swedish krona, then you could take a step back and replicate yourself just trading the options or the futures on the currency pair itself. That's where I like to go before I get into some of these esoteric products. Because the more you read into the fine print of some of these esoteric ETFs, so we were talking about this on our last show with some of the esoteric volatility ones. They have these weird scenarios. They could lose a lot of money. I'm not saying this one isn't one of those cases. I haven't had a chance to dig into the prospectus, but whenever they're trying to replicate this elaborate scenario, and usually inevitably involving baskets of futures and options on the futures, you get into all sorts of issues with roll yield and everything else that could really make the product not perform the way you want it. So I would say if there's a couple of these, and there probably are, that you're more interested than the others, I would probably trade those independently myself. So you can trade dollar pound, you can trade dollar, yen or dollar franc if you really want that, or certainly dollar euro. That's the way I'd probably go with this. That's because Nick, I lean more towards the products that are a little bit more heavily traded, a little bit more liquid, and a little bit more straightforward, quite frankly. This is, if you want those relationships, you can trade those directly. I don't know why you need to go through this kind of esoteric basket. What are your thoughts on that, Nick?
Yeah, I mean, it seems tough to put the dollar against everything else like that. And like you said, I mean, I don't know much about how that stuff is packaged, but I know that they typically have fees associated with them. But you're right. I mean, if you're really looking to trade against, you could probably half that basket of currencies that it's trading against and go, like you said, pick individual pairs and trade those on the exchange. And you could even get a little bit more fancy, and fancy might even be the wrong word, but a little bit more targeted by looking at the short dated weekly options that each of these 2 p.m. fix, FX 2 p.m. fix options has. So there's plenty of open interest. There's nice tight markets on those. I'm looking at them right now. And there's big change in open interest this week, just like in the euro alone. In the first weekly, the second weekly, and the third weekly, you got an 85% change in OI, 31 and a 32 and a 24. And that's 22,000 now, 12,000 and 16,000. So pretty significant activity in there. So I think, pick your poison from a currency that you want to where you think you obviously have some opinions on which you think are bullish, and then go out there and trade those short dated options, because that's going to give you a cheap premium that will give you some bang for your buck in a short time frame, because they're all, you can pick anything from 21 days to 7 days to something that's expiring today.
Yeah, that's certainly the way I would lean. Again, I didn't get a chance to hear. Maybe they have some. Maybe they want that full basket. I'm going to guess, though, if you ask them, they really want a couple of those currencies, and that's what they want against the dollar. And that's something you could easily and probably do a lot better job of replicating yourself, quite frankly. But good questions. That's something. Sometimes it's amazing to see the universe. It's such a huge universe of ETPs and what they try to replicate on the futures and futures options side, and how well they do, or sometimes don't do, when it comes to these types of things. So yeah, we love these. If you have an esoteric product you want us to maybe compare or contrast to something that's going up in the futures options world, hit us up. We do love to hear those kind of things. You guys are probably aware of some weird ones we probably haven't even seen it talked about here on the show. So hit us up if you do have those questions. Speaking of hitting us up, we were talking last week, Nick, a lot about index vol, about Russell 2000 skew in particular, and how that was shaping up versus some others. We talked about S&P. We also talked about Nasdaq, the Qs, and we had a lot of good talk about that. And looks like Michael Khouw, I believe he's on one of those CNBC, maybe options action. I'm not sure. I try not to watch those whenever possible. No offense to him. I just don't like, I'm not a big fan of the content over there in general. But that said, he was listening, obviously, last week, because he sent over some screenshots comparing the 90-day skews of today versus 3 years ago. He used it for IWM, but you can make the same analysis here in the Qs. And it's kind of interesting to look at these screenshots. Maybe we'll include these, and I think we retweeted them last week. If you follow us over there on Twitter, listeners, you can get a handle on those as well at options. But they're interesting screen grabs. They kind of show how similar they are, actually, quite frankly, between the Nasdaq and the Russell 2000, which is kind of interesting. You might think Russell would be a little bit different in terms of its own skew, but they actually do look pretty similar. I know, Nick, you were playing around with this yourself last week, looking at the Russell products over there on Globex, as well as comparing it to what they have for Nasdaq and other things. Are your thoughts the same, or do they think they're very similar to these graphs that Michael sent over to us, or do you have maybe a little bit differing opinion?
Yeah, I think last week we mentioned that we didn't see quite the extremes that we were seeing in the products that have been out there for a while, the Nasdaq and the S&P, meaning that we saw a little bit less. Less of a skew on the downside, right? So we didn't see quite the gap in the quick skew channel here. But if I go out there and compare it today, I think I'm going to see the same thing. So let's look at I'm going to look at the 7 to 21 and like the 30-day option. So the 7-day options, those look, I'm still going to say I think that the Nasdaq and the S&Ps are a little bit steeper put side skew, and a pretty much a very similar call side skew. So you're seeing a little bit more steepness on the puts on the stuff that's been out there. And now remember, you're talking about 100 things, and then 500 things, and then 2,000 things, right? So what happens when you add more into the mix? In all likelihood, right? You're going to knock down some of that variability, some of that volatility. So maybe it's not so sensitive, or they're not the downside is not they're not so worried about that. And maybe it could even be the fact that of late the techs have been really pretty strong, so that's why we're seeing less of that risk tilt on the curve. But, again, that's in the first few contracts. When you start to go out further, it starts to look a lot more like a regular index. And I think over the course of time, that's what you're going to see this thing do. So I would imagine that it would look like, one of those fans that you pull out, right? So you could probably hold it steady at the money and fan it out, and that's what the curve would look like on the left side. So sometimes it would be a little tighter and sometimes it would be a little loose, but I think those curves are going to generally look pretty much the same, since it's pretty much just subsets of the same asset class.
Yeah, I'm looking forward to getting these products have a little bit more traction over there on the Globex. We can dig into them a little bit more. Obviously, we can look at IWM and other things as kind of a bit of a precursor, an indicator of how they're probably going to look, but it'll still be interesting to have some data we can sink our teeth into. And we can talk a little more about, maybe some of the interesting opportunities and differences between, let's say, everyone's maybe sick to death of S&P vol and S&P skew. So it's kind of fun to talk about a few other indices and what's going on with Nasdaq, of course, and indeed the Russell 2000. And Russell in particular, because it seems to be a little bit of a different beast, 2,000 small cap names versus 500 big cap names, a little bit different drivers for them out there. Not quite as susceptible to some of the big macro things that would take down a large S&P 500 name, which makes it attractive in this environment when you're kind of looking for something else, something that's got a little bit of life to it. To see again non-farms and S&P 500 vol getting crushed again. So if you're tired of that story, maybe want something a little bit different. We'll see. Maybe that will be the area to look out there in some of these other indices. Mr. Nick, any other thoughts here before we move off of Russell and index vol for the week?
Yeah, just mentioning the Russell. From a purely percentage standpoint, the option had an increase of like almost 64%. So we are seeing that gradual move upward, which is what we want to see for this to take traction. And when I go out there and look at the other exchange and see that, you see a pretty flat open interest history right now. So, there's going to be some movement over here, and that's going to be good. And same thing on the future side, increased open interest. And one thing, and I don't know the specifics, and I didn't copy it, and I should have copied it and put it in my notes, but I would like if somebody out there who's listening, or Mark, if you know a place that we could find it, we've had this nothing but run up in the SPOOs. I would like to see how much of that is equated to things, the big caps like Apple and Amazon and Google. And I had seen something where Apple, the amount of points that it was that were attributed to it on its run up over since the presidency started is significant. So I tend to at least from watching like my basket of stocks versus the S&P, I'll see the S&P up, and then I'll see the basket of stocks just kind of flat. So it seems to be a very thin rally on what's causing these increases in the big index.
Oh, yeah, there's a lot of data out there on that. People have jokingly, maybe not really jokingly, only semi-jokingly referred to Apple for a while as kind of an index unto itself. It does drive a lot of the S&P. Perhaps another reason why maybe you want to look somewhere else, a more diversified index. You don't like these big names like the Apples really making up the lion's share of what you got out there. Then that's perhaps an inkling. Maybe you want to look elsewhere. Speaking of elsewhere here, we got this question from, let's go this one first. Let's go to Jack S. He wants to know, he says, doesn't WTI go out 5 years? Nick, this is actually, I think this harkens back to a listener question we had, I believe, when you were traveling that week, and Matt and I, where someone wrote in asking, are there effectively, if I recall the question correctly, are there effectively the versions of leaps in the futures options? Leaps, of course, in the equity options realm stand for long-term equity anticipation securities. So we had a good conversation, Matt and I, about what is available out there. We, of course, pointed out the euro dollar being a very long-term product, and you can go crazy out with we didn't really get into the treasuries. Those obviously go out for quite a while. But yeah, the answer we had was yes, you can effectively replicate leaps, which typically go out a couple of years, usually 1 or 2 years, maybe 3 on the long end. And that's usually what you get. He's writing, doesn't WTI go out actually 5? I don't think we specifically said WTI how far it goes, but I'm looking at it right now. It looks like you're close, Jack. It goes out about 4. I can see listings out here all the way to Dece of 2021. So that's pretty long term. That's a very long-term contract. So that's usually, with so much interest these days in weeklies and short duration contracts, you don't get a lot of people asking us about we don't get a lot of people asking us about going out the other way. I guess Jack S is also interested in this. So you're close. It's not 5 years. It looks like it's 4, at least listed here. Maybe there's some esoteric blocks you can put up out there, but for listed stuff, looks like about 4 years. Anything for our friend here, Mr. Jack S, or your thoughts on that question you missed a couple of weeks ago about the notion of leaps and, what are some of the longer term contracts you can get out there in futures options? Mr. Nick, have at it, sir.
I like it's Jackass. Jackass is his name, so not to be confused with Jackass. or Jack S. So I thought that was a pretty good one there. So anyway, the thing to keep in mind in Quick Strike, what we do is we cut short the amount of expirations that we actually show. Okay, so the reality is that we go out to where, you know, and you can really tell by looking at the open interest. So when you go to the CME site itself, you can go out there and there's actually contracts for 10 years that are listed, but out from like the fourth or fifth year forward, you really only have open interest in like the June and even further out, just the December contract. So what we do is we sort of limit it to like 36 to 38 months worth of data. So they are leaps, but really what it comes down to is the market generally uses the June and the December contract, and those are the only things you'll see trade out into the leap section. So you'll have contracts 1 all the way through 10. Open interest is very small out there, so we don't worry so much about it. Very few of those trade, except if they're trading in like strips. So you'll see strike strips trade, and that's when you'll see the open interest occur. And like if you go out there and look at the open interest on the site itself, you'll see that they'll just be like pockets of zeros and then like a 50 lot across like 5 years. So they're out there, but my question would always be, why would you be out there in the first place? And Mark mentioned there's 4, and what he was mentioning is that there's 4 in Quick Strike. So we don't have the full 5, so there's a little bit of a misrepresentation here. But on if you go look on the TWIO report, we do have some double asterisks out there that says these are for the contracts that we're showing in Quick Strike, where there are more that are listed. So we just basically watch what's going on in the exchange, and if it gets to the point where there's 5 years trading in the crude, then we'll add 5 years. In the Eurodollars, it's a little different because there's 10 years worth of futures contracts, so you show all of those, just like we show all of the futures contracts in the crude, which goes out 10 years. But we always sort of limit it to the first 2 years because that's where most of the activity is. So I don't want to push Longo under the bus here. I just want him to know that I shortchanged him on what I'm displaying in Quick Strike. So he's exactly correct from what Quick Strike is showing. But from a practical standpoint, they go out way further.
Yeah. I think I was referring to, of course, the liquid stuff. I think it's probably what he was referring to too. But you're right; these contracts do go out for a while. I'm glad to see you guys actually, take those steps, because why would you want to list things that really in here that don't have little to no data on them? But these are good. I like these kind of questions that come in. People like to ask about these, the far-flung reaches of the chains and some of the pushing the boundaries a little bit. I kind of like these. So yeah, more people than I thought are interested in the longer term contracts. We talk so much about weeklies and short duration. People ask all the time, is there a daily? You kind of get caught up in that. So it's nice to see that not just our listener, I don't have their name, I apologize, from a couple of weeks ago, but Jack and some others here too are interested in the farther end of the curve. Since we're talking Quick Strike systems, Mr. Nick, this is a good one for you to maybe wrap up here on. This comes from Nils. I like that. Nils wants to know, is he looking at the quickskew graph correct? He wants to know, and so listeners, if you haven't seen it, I'm sure we tweeted a bunch of these out in the past. Maybe we'll do so again so you can see exactly. The quickskew has a nice tool in it that you can see it, by a numeric version in the quickskew. You can also see it graphically. He's asking, you see these lines above and below kind of the axis there. And he's asking Mr. Nick if he's reading it right. He says, if the top line goes up, does that equal the call vol, the call skew, call wing is going up? And he says, if the bottom line goes up, is that the put vol going up? So Mr. Nick, is Mr. Nils or perhaps Mrs. Nils, are they reading that correctly, sir?
Well, I think you got to be careful because what you need to look at is you need to and after I saw this question, I made a note to myself to just have a little bit more clarity. What you want to look for is the thicker line is typically the call line, and the thinner line. So the call line is going to be the thick line with the markers, the circle markers for each of the plot points, and then the thin line is going to be the put line. So sometimes the call line, right? If we have rich calls, we're going to see the call line above, and if we have rich puts, we're going to see the put line above. So you really got to look at the thickness of the line. But look in the grid, and you should see a line with a little dot in the middle. Or look in the legend, a line with the dot in the middle, and then a regular line. The regular line with no point markers, that's the puts. And the line with the dot marker, that's the calls. That's how it'll be for the next couple of weeks. What I think I'm going to end up doing is just doing a thick line for the calls and then a dashed line for the puts. But they could shift, right? Just like we talk about the shifting of the curve. Sometimes the thick line will be above, the calls will be above, sometimes below, and vice versa. So, yeah, it's a good question. And Mark, you make a good point with the report. What I'll do is what I'll do here is I'll go out to Crude and I'll tweet this 30-day quickskew report. So then you could take a good look at something that you can look at the numbers and have a pretty good indication. And you can look, so there's a table like you mentioned, and then there's also a chart underneath it. So I'll tweet this one right now, and this is for WTI 30-day quickskew. And let me get this at options at CME Group, and then put it out there. And there we go.
Magic, just like that, sir. Magic, just the immediacy of technology bringing things to your grips that easy. Oh, I forgot let's wrap it up here on our poll there. Speaking of Twitter, we asked, like I mentioned, our listener earlier, even on last week's poll, you guys do it every week. You chime in somehow with Bitcoin. Last week you said that was your choice. Your other choice, we didn't list it, your other choice for where you're getting your vol these days. Bitcoin, can't argue with you. It's been very volatile of late. So we thought, there's been some news in that front of late, Mr. Nick. So let's close it out on this. We asked you guys going into the show today in one of our little TWIFO Flash polls, what do you guys think? There's plans to launch some cash-settled Bitcoin futures coming up later this year, I believe in Q4 of this year. Are you guys excited? So would your choice be you can't wait? Or is your choice I'm not interested? Or are you somewhat curious? Or are you waiting for another product? Let's say Ethereum. Mr. Nick, what do you think our listeners are voting for, sir, here as the show is wrapping up?
Well, I know what I voted for. I voted for somewhat curious because just of late, after all of the conversations we've had on the show, and then the news about Ledger X, and then the news about the Winklevoss boys giving data to the CBOE, and then the news about the CBOE starting to list the cash-settled stuff, I have to be somewhat interested because I think that, at some point we're going to have to cover that product, and maybe just maybe we'll start looking to cover it sooner rather than later.
Yeah, it's coming. Like how many times have I said this on the show now? The volume of inquiries and little comments about Bitcoin that are flooding in these days and related cryptos. I knew someone was going to act on it, and we already talked about CME, what they're doing with patents and things to get it on there. So all the major exchange groups seem to be coalescing behind this move. They're not idiots. They realize there's interest in the product. They're going to want to list it. And so as much as fun as iron ore is, something people actually want to trade in large volume, it is always a fun thing as well. And Nick, you're not alone with the audience. About 42% right now saying they're somewhat curious. So they're interested. They probably want to wait till they're listed and see how they trade, get a little more of a sense of what the actual underlying is and how it works, etc. Nice that it's cash settled. That makes it a little bit easier from a delivery standpoint. 35% though, super excited, saying they can't wait to get their hands on some Bitcoin futures. Only 19% saying they're not interested, which is kind of interesting. 4% saying they're waiting on some Ethereum out there, so they want some alternative cryptocurrencies. All right, listeners, that music means we're done, unfortunately. It's fun. This show flies by. It's been an hour. It's crazy how much we pack into that 1 hour. But before we go, we check back in with my cohort, my partner in crime. He just mentioned it. They're always cooking up cool, interesting, crazy stuff over there at QuickStrack, playing with the quickskew reports. You can see the tweets I was looking at right now, looking at the new style for the report. So all kinds of good stuff going on over there. Mr. Nick, have at it, sir. What is coming out the pike at QuickStrack we can look forward to, sir? You mentioned the block trades. Anything cooking there?
Yeah, so we're working on getting that out there, and then I had mentioned before we're gonna be putting out hopefully soon a global product, a CME global product browser, and from there, what's going to be nice is you'll be able to. There's other product lists on there, but this one will be a little bit more intuitive and really easy to use, and you'll be able to search for the products. You'll be able to do single clicks to get to the contract specs and that type of thing. But even nicer, you'll be able to get a whole list of the expirations. You'll be able to export those expirations, so you can start to take a look and get a little bit more familiar with what's trading there. And then hopefully we're going to also, even for some of the more esoteric things, anything that we can chart, you'll be able to get a futures chart for any of the expirations that are currently available out there, and see what that price action has been over a period of time. So that's coming out there, and then just continued efforts to integrate within CME Direct. So if you are out there and you're trading and you're not using CME Direct, you should at least download it to take a look and see what kind of free integration and free tools you get on the Quick Strike side with that. If you are in CME Direct, next weekend you'll see an even nicer version of Quick Strike integrated in some really sort of great landing pages, so you can get to understand a lot of what's going on in a particular contract and its volatility and its volume, all that kind of stuff in a single view. So maybe I'll tweet that out now after we're done with the show.
Good stuff, listeners. Stay tuned to Nick. If you haven't followed them over there, follow them. Quickstrike1, QUIKSTRIKE1. No C. You can get all these reports that we're retweeting out there for your reading pleasure out there. And of course, while you're over there, make sure you check out their stuff, cmegroup.com/TWIFO. If you want to see all those reports for yourself in action, kick the tires and light the fires, as they say, you can do that over there completely free. And it's pretty fun. So if you're doing it during the week, you want to check out what's going on in your favorite product, head on over there anytime, day or night. It all works all week long. And during the show, it's live with a little bit extra juice, which is kind of funny for you. So you guys can click on some extra links in there and see a little bit more like these quickskew reports are talking about and what's going on in the different months and stuff. So you can dig a little deeper during the show. So good extra incentive to join us live. I hope we'll see you next week. On behalf of Mr. Nick and indeed myself, thank all of you for downloading, streaming, and subscribing to the show. And of course, for sending in such great questions. Keep them coming, including the Bitcoin ones. Yeah, we'll take those too. And we'll see you next Friday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.